In general, I'm pretty bullish for 2025. I think that liquidity is probably going to be pretty good over the next 12 months. And I generally expect Bitcoin to probably be higher 12 months from now than it is now. Obviously, no guarantees, but that's kind of my base case at the current time. And I think that one of my kind of macro views on the election is that nothing stops this train, which is to say that there are people that are pretty convinced we're going to see a big budget reduction or something like that. And I don't really see that as likely. When we look at major areas of government spending, it's mostly actually not on, kind of certain bloated government employee areas. It's actually these really big core areas, things like Medicare, Medicaid, Social Security, defense, and interest.
Financial analyst Lyn Alden examines the factors influencing Bitcoin's price increase and its probability of sustainability. Alden explores how market liquidity, fiscal policy, and money supply trends will affect Bitcoin's future. She draws attention to the conflict between monetary and fiscal policy, pointing out how it affects asset values and the overall state of the economy. Alden also clarifies how the recent moves toward defensive market positions and the bottoming of the money supply point to more profound fundamental changes. As traditional financial systems struggle with the effects of these shifts, she notes, decentralized technologies like Bitcoin are gaining attention, particularly in areas where regulatory demands are more intense. This friction, Alden suggests, underscores vulnerabilities within legacy financial frameworks and raises questions about future stability. Before we dive back into Lyn Alden's insights, please take a moment to like this video and subscribe for more finance and cryptocurrency content. Now, let's hear her following words.
So I think that the breakout is a good signal, right? So we've been consolidating in price since March of this year. I think that the launch of the ETFs kind of pulled forward some demand. So you had a little bit, overly high sentiment. People kind of bid it to the moon, and it takes time to kind of digest that change. And we kind of went through that. I think we would have eventually broken out either way, regardless of how the election turned out. But obviously, there's even though there are Republicans and Democrats that are on both sides of the issue, and right now in American politics, the Republican side is generally more favorable toward Bitcoin than the Democratic side. There's talks about a strategic reserve, explicit statements that people should be able to custody their own coins, or and maybe even have it not be taxed. And so I generally take the under on major changes. So would I guess in 4 years from now, do we have a gigantic Bitcoin reserve? Or is Bitcoin tax-free? That'd be cool. I wouldn't really base my investment decision on that being the case. But in general, I'm not making a statement around politics, but basically in terms of this specific industry, that was generally seen by the market as the more favorable choice. I think that where I'm also more conservative is around privacy. So I think that while this election had major impacts on, for example, the SEC and broader crypto securities in general, and then maybe things like Bitcoin strategic reserve and stuff, I doubt it's going to be super impactful for these problematic laws around privacy, or in some cases, not even laws, but just regulations by entities, how they interpret the law. And for example, even going after non-custodial privacy services and things like that. And so we talked about risks earlier in this. I still think one of the biggest risks to the network is kind of this anti-privacy push that the United States government and others have. And that's pretty challenging to change in the near term. I think it's going to be a longer battle. And I think even public opinion is kind of on their side at the moment, because people still have this mindset that why do you need privacy? Must mean you're up to no good. Or, kind of Bitcoin's only used by money launderers and druggies. And it's kind of still the mindset that a lot of people have. And that's why I think that education is so important, and the work you're doing to keep educating about it. In general, I'm pretty bullish for 2025. I think that liquidity is probably going to be pretty good over the next 12 months. And I generally expect Bitcoin to probably be higher 12 months from now than it is now. Obviously, no guarantees. But that's kind of my base case at the current time. And I think that one of my kind of macro views on the election is that nothing stops this train, which is to say that there are people that are pretty convinced we're going to see a big budget reduction or something like that. And I don't really see that as likely. When we look at major areas of government spending, it's mostly actually not on, kind of certain bloated government employee areas. It's actually these really big core areas, things like Medicare, Medicaid, Social Security, defense, and interest. And that kind of alone is 100% of tax receipts. And one of the things I found interesting is you've had somewhat of a shift in the Republican Party over the past decade, which is if you go back a decade, that was kind of the Paul Ryan era, which was kind of a more push toward trimming some of those areas. Whereas, for example, the 2024 Republican platform officially said we don't want to touch Medicare or Social Security. We don't want to reduce it or increase the retirement age, which used to be more of a Democrat position. And so if there are certain aspects where the current Republican Party has shifted a little bit more toward like what we see in like European conservative movements, which is that they might be a little more social conservative than there are other parties there, but they're not necessarily super fiscally conservative. There's different parts in that kind of political spectrum that politicians and voters can fall on. And so I generally assume that deficits are probably going to continue, but I'm going to monitor bills and legislation as they come up and see how this goes.
Lyn Alden believes that after months of consolidation, the latest price breakthrough of Bitcoin is promising. She notes that the introduction of exchange-traded funds, ETFs, is partially to blame for this spike, highlighting the need for market sentiment to level off before this predictable increase. Alden also notes that the Republican Party's relatively supportive stance on Bitcoin could boost investor confidence. She cautions that privacy is still a serious concern, pointing to regulatory efforts against non-custodial privacy providers as an increasing problem. Alden is hopeful that Bitcoin will have robust liquidity by 2025 and that favorable circumstances may result in notable price gains. The trajectory of Bitcoin may be further influenced by the ongoing budgetary deficits in the United States and the evolving political discussions surrounding social spending, as she clearly highlights. Alden draws attention to the continuous regulatory opposition to Bitcoin in Europe, comparing it to the "then they fight you" phase of resistance. She contends that this resistance frequently reveals more serious flaws in established financial systems. We'd love to hear your thoughts on this in the comments below. Now let's return to the interview and hear her following words.
Do you think we're seeing it in Europe to some extent, probably at the most right now, which is that you have pushback against Bitcoin. They're kind of in the then they fight you stage. And the way that I phrased it before is if a decentralized spreadsheet threatens your system, it's not the decentralized spreadsheet that's the problem, it's your system. But that's not how a lot of people see it when, their own paychecks and their own, economy's having a problem. Going back to the earlier idea of either a deflationary bust or a hyperinflation, I tend to fall in the slow melt-up camp. That's kind of the nothing stops this train camp, which is that large monetized fiscal deficits are generally going to keep continuing. They're very, very hard to reduce at this stage because it's kind of recursive. I generally don't see hyperinflation in any sort of near-term sense because, we're not even at like emerging market stage yet. We're kind of like dabbling in how a lot of emerging markets function in terms of finances. And most of those are not in hyperinflation. There's $13 trillion worth of global dollar-denominated debt that the different entities have, and that all of that is in flexible demand for dollars. So this is like a Gordian knot. Like this is a really kind of like entrenched network effect, and it's very, very hard to hyperinflate the dollar. Maybe in the long arc of time. Right. So I'm not talking things like if you look at 20 years or so, I don't really have an opinion. We'll get closer to that. But when I look at an investable time horizon or kind of a political time horizon of say 5 or 10 years, I don't really see something like hyperinflation on the table, but I do see something like emerging marketification of U.S. finances, that we enter a phase where we're structurally running these bigger monetized deficits. And then the key risk there is that if you're on the wrong side of those deficits, you're kind of getting siphoned away. And if you're on the right side of the deficits, you're doing pretty good. And then that's how you can build up more and more populism, more and more frustration that people have. And because they know something's wrong, but they're not quite sure, what the nuance of that problem is. And that's kind of the thing that I get concerned about.
Lyn Alden describes Europe as being at the forefront of regulatory resistance against Bitcoin. She suggests that if a decentralized technology like Bitcoin, which she calls a decentralized spreadsheet, threatens existing financial systems, the issue isn't with Bitcoin itself, but with the fragility of those traditional systems. However, she acknowledges that many people don't see it that way, especially when economic challenges threaten their livelihoods. She then moves on to a more general discussion of economic dangers, emphasizing her preference for a slow melt-up of the economy as opposed to a quick collapse. Alden explains that large, persistent fiscal deficits are extremely difficult to reduce, and that these deficits are likely to continue driving inflationary pressures. However, she does not foresee hyperinflation in the near future. Instead, she believes the U.S. is moving toward what she terms the emerging marketification of its finances, where economic dynamics begin to resemble those of emerging markets. According to Alden, this situation is marked by rising economic disparity, with those who profit from the deficits prospering, while those who are negatively impacted experience mounting financial hardship. She cautions that this inequality may give rise to social unrest and populist movements as people believe there is a fundamental problem with the economic system, even if they are unable to identify the exact reasons. Make sure to subscribe, share, and give this video a thumbs up if you thought Lyn Alden's viewpoints were insightful. This will keep you informed about future analyses of macroeconomic and financial developments. Thanks for tuning in, and see you in the next one.